Bazaar Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. We're coming to you live as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel, and Rima is joining us now for the next 2.5 hours on Bazaar Morning Call. Guys, hi, morning.
Hi, morning. Good morning.
There's been cricket and now there is tennis, right, Rima?
Absolutely.
I believe you watched the Djokovic match yesterday.
I watched the Djokovic match and I'm very excited. I'm hearing that he's going to make it to the finals on Sunday. So I've got the next few days packed watching it.
All the best on that one. I've missed out on it, so hopefully I'll catch up on some of the French.
Well, I'm such a Djokovic fan that this is his chance to, go one step ahead of Nadal. So I'm really rooting for him.
I'm rooting for the young guy, Rima, Alcaraz.
Alcaraz. He's number one. He's seeded number one.
20 years old, no weaknesses, absolutely fantastic attitude on the court. I mean, it's just scary, At 20, you're that good. The only thing which can happen with him is that he loses motivation or something. He's already done everything at 20. So to do that, to do the same thing for another 10, 15 years, I mean, that's going to be...
Well, he just has to look at his prior generation, right? Nadal, Djokovic, all these guys won at 17, 18, 19, 20. So.
Absolutely.
And they keep going on. They went on.
All right, well, will the market go on? That is the question, right? You've got overnight things looking, I would say, better. But before that, just a quick word, right? Yesterday, the Nifty and the Bank Nifty saw sharp recoveries in the second half of the day. We saw positive daily closes, but it still ranged kind of price action. And it's been like that for the last many days, which basically is this 18,500, 18,600 kind of range, which has not been taken out in a conclusive way. I'll come back to levels you need to watch out for in a bit from now. Now, the big US indices all consolidated. You look at it and say, well, nothing special. An okay kind of a day. The S&P, the Nasdaq is what I'm referring to. But then you look at some of the other indices and you get a feeling that under the surface, beyond the mega caps, there is stuff starting to stir in the US. The Russell 2000, which is the broadest measure of economy facing small mid-cap stocks in the US, that went up 2.7%. The regional bank index in the US went up 5%. People have been complaining how the rally has been so narrow. I mean, we included. We put out a piece last week saying that 6 stocks have contributed the full 100% of the S&P's rally this year. Is it broadening out? The regional banks index, that has been the trouble spot, right? That went up 5%. The broader banks index went up almost 3%. So, if this is indeed broadening out, and that, by the way, is still the minority view, if it is indeed broadening out, it bodes well for the health of the overall market. You want a market rally which is broad, not narrow, because narrow rallies rarely last for a long period of time. But it's still too early to take that call, but indications that perhaps that may be the case. Tomorrow we get the RBI decision here, and, it'll be an important one. A pause is expected, but I think the outlook, etc. Keep a close eye on the monsoon progress as well, and we'll put out more information on this one. The Australian Weather Board has basically upped their alert as far as the El Nino is concerned. They're saying that they're a little more worried as compared to where they were earlier, but we'll talk to experts on this. But this is an important input which will go into what the RBI will say in terms of their outlook and what markets will price RBI will do the rest of the year. Coming back to levels, things you need to watch out for. The initial resistance, these are very near-term levels meant for, if you're really trading on a day-to-day basis. Initial resistance is at 18,662. We left off at 18,599. On the way down, the low of 18,464. But this is nothing. This is the range. The high is the 30th of May high, and the low is the 1st of June low. 18,464 basically is the level which the market must protect on the way lower. There are moving averages, etc. as well, but they're far away. So this is the near-term kind of levels which the market must protect. Bank Nifty has resistance at 44, that's not changed, 44,499, 44,500 basically. Bank Nifty is throwing up very confusing kind of signals. It's not breaking out, neither breaking down. So resistance 44,500. On the downside, the Bank Nifty must not close below 43,706. So again, near-term kind of levels to really watch out for as we proceed into the day. SGX is indicating a 14-15 point higher start. So again, like yesterday, same time it was showing, I think, a 20-25 point change. It's neither here nor there. Tomorrow is the RBI decision. So perhaps we get one more holding pattern kind of a day just holding on, waiting for the cue to get out of the way, and then perhaps we see a more decisive kind of a view? Rima.
Hi, so I'm going to watch whether the markets can conquer this band of 18,600 to 18,700. Pull up, the intraday highs for the last couple of days. From the beginning of last week to where we are today, the Nifty has made 5 or 6 attempts, and intraday it's gone above levels of 18,600. But most of the closings have been below that level. So it is facing a bit of a congestion resistance level resistance zone between 18,600 to 18,700. Yesterday, the Nifty closed almost at that 18,600 mark. If you add about a 30-40 point up move on the spot Nifty, you would get to levels of 18,640, 18,630 thereabout. But can we go all the way and conquer this resistance zone, this congestion zone? That's something that I will be watching. The good part, as you pointed out from the Wall Street action, was the broadening of the rally. The fact that small caps participated, Russell 2000 with a 2.7% rally. This morning, there are big gains coming through in many of these China-related stocks. So Hang Seng, for instance, that's up close to about 1.4%. You've got gains in the Shanghai index as well. Two sets of news. One, there is hope about a stimulus. And two, Secretary of State Anthony Blinken is likely to be traveling to Beijing in the coming weeks to help normalize relations. And that's one of the reasons why there is so much optimism in Hang Seng in China this morning. In fact, even the Chinese listed shares in the United States, they have an index over there, and that rallied 3.6% yesterday. The SGX 50, as we pointed out, is suggesting a gap up opening, but just about 30-40 points. But Nigel, yesterday we had that big last 30-minute surge, and it's courtesy for Nifty expiry.
Well, that's right, Rima. The Nifty Financial Services Index, that moved to the high point of the day, and because of a bit of an overlap, you had the Nifty Bank as well that did do well. So the reason that the Nifty ended close to around 18,600 was because the Nifty Financial Services Index, it played out expiry and it recovered from the day's low. In fact, it went to around 19,500 odd, but it couldn't cross that on a closing basis. Now, in terms of trade setup, well, that monsoon fear continues. But on the flip side, globally, there are the probability of a rate hike has diminished now. If you're looking at the data that we get overnight, the probability of a pause has gone up. So that's pretty good news as well. So we continue to trade in a range. But the most heartening aspect yesterday was domestic themes continue to see buy. Cement, autos, both of them were the biggest gainers in trade. And the cues on the derivatives market and live market, you look at the premium on the Nifty, that came down. So you're wondering whether or not there was shorting out there. But actually, there was big unwinding of positions, both on the Nifty and predominantly from the FIs as well, because they lightened their long positions. Close to 13,000 contracts were unwound. Now the markets are mildly net short positioning at close to around 54%. Two strikes I'm looking at, 18,600 call, because the premium out there is close to around 55 rupees. And the open interest is more than a crore shares. And on the downside, 18,500 put as well. So both those two strikes are rather important. In terms of levels, well, we go back to that level, 18,450 on the downside. That should hold out in the near term. While on the upside, you'll be bracing for a breakout only once we get past that 18,670. That's because the recent high is closer to those levels, and the options data as well, with the kind of writing we have seen at around 18,600 call, is indicating that the bears will come to fight in for that zone. SGX Nifty suggesting some green to kickstart trade. I think we are in for another range-bound day, and then in fact over to the RBI governor to give us further direction from there on. Well, let's see how we go from here.
All right, Nigel, we'll keep an eye. Let's quickly tell our viewers what's lined up here over the next 30 minutes. We have updates from global markets, which we will touch upon and wrap up with Richard Harris of Port Shelter Investment Management. Our research team will get you the top list of stocks to watch out for in trade. Devin Choksi will be joining in at 8:30 to address, stocks and, the market direction, what he likes out there. That's at 8:30 this morning.
On the macros, Indranil Sen Gupta of CLSA says the Australian Bureau of Meteorology has upgraded from El Nino Watch to El Nino Alert. The key question is whether El Nino will develop by June to obstruct rain clouds moving towards India, and anyway, the monsoon onset is already a bit delayed. He adds, as El Nino would impact the southwest monsoon and Kharif harvest, CLSA sees a 25 basis point downside risk to FY24 GDP growth forecast of 5.5% and a 200 basis points upside risk to the inflation forecast of 5.2%. Finally, he says this development could push the first rate cut from the RBI from October to December.
For equities, Vinod Karki of ICICI Securities says, given the sharp rally from March 2023 lows, their Nifty target of 20,000 implies a modest 8% upside from current levels. They continue to prefer beneficiaries of the investment and credit cycle in the economy, along with high-end discretionary consumption. They like banks, capital goods, utilities, telecom, real estate, building materials. In terms of stocks, their top picks include SBI, Bharti, BHEL, NTPC, BPCL, Mahindra & Mahindra, Phoenix Mills, Brigade, Interglobe Aviation, Kalyan Jewellers, Jubilant Foodworks, Zomato, SBI Life, IGL, and a few others as well.
Let's get you some money market views on the rupee. Abhishek Goenka of IFA Global says MSCI rebalancing related inflows had resulted in the rupee strengthening to levels of 82.27 against the dollar. However, persistent dollar bids from oil importers have seen it quickly give up gains. Weakness in the Chinese yuan in anticipation of People's Bank of China taking measures to stimulate the Chinese economy has been weighing on the rupee. In this backdrop, it will be interesting to see if the central bank lets go of the ceiling at 82.9 against the dollar in case the yuan weakens further. He expects the rupee to trade in a range of 81.6 to 82.9 against the dollar over the next few weeks.
Okay, this is a call on bonds. Neeraj Gambhir of Axis Bank says the market traded range-bound despite strong GDP data and liquidity absorption by the Reserve Bank. The market will take further cues from the RBI MPC this week, Neeraj adds. While the RBI is expected to continue with status quo on rates, inflation projections, policy stance and language around liquidity management will be closely watched. He expects the 10-year benchmark yield to trade between 6.9 to 7.05% range for the rest of the week.
Well, that's the equity market setup as well as the money market calls. But we've got a lot of stock-specific action that we're tracking for you. We get to that in just a bit. But for the time being, we run you through the list. We're looking at HAL, Torrent Power, GMR Airports, Engineers India, ICICI Lombard, New India Assurance, Star Health, Bank of Maharashtra, and IFB Industries. They're stocks on the back of positive news flow. While on the flip side, you have Gravita. That could be the stock that's reacting to news flow that the promoter sold some stake in yesterday's trade.